Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 7th, 2024, and we're diving into TKO's third quarter earnings report. TKO, a powerhouse in sports entertainment, combines the might of UFC and WWE. Joining us is John, Senior Analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. TKO's latest earnings report is quite revealing, especially with the recent merger of UFC and WWE. There's a lot to unpack, from revenue growth to strategic initiatives.
Revenue and profitability overview. Let's start with the top line. TKO reported a revenue of $681.2 million for the third quarter, marking a 52% increase. John, what are the key drivers behind this growth?
The revenue surge is primarily driven by WWE's performance, which contributed $326.3 million, a significant increase from the previous year. This was partially offset by a decline in UFC's revenue. The growth in WWE's segment is attributed to increased media rights, live events, and sponsorship revenues.
And what about profitability? How did TKO fare in terms of net income and EBITDA?
TKO's net income rose to $57.7 million, up by $35.7 million from the previous year. Adjusted EBITDA also saw a 29% increase to $310 million. This reflects the company's ability to manage costs effectively despite increased operating expenses.
Segment performance analysis. John, let's delve into the segment performance. UFC's revenue decreased by 11% to $354 million. What factors contributed to this decline?
The decline in UFC's revenue is mainly due to a reduction in media rights and content revenue, as there were fewer events compared to the previous year. However, sponsorship revenue increased thanks to new sponsors and higher renewal fees.
On the other hand, WWE seems to be performing exceptionally well. Can you elaborate on that?
Absolutely. WWE's revenue increased significantly, driven by higher media rights fees and successful live events. The segment's EBIT margin improved to 54%, reflecting effective cost management and strategic growth initiatives.
Strategic initiatives and future outlook. TKO has updated its full-year guidance, expecting to hit the upper end of its revenue and EBITDA targets. What does this indicate about the company's future prospects?
This upward revision in guidance underscores TKO's confidence in its business model and growth trajectory. The company is capitalizing on the synergies from the UFC-WWE merger, enhancing its market position.
TKO also announced a significant share repurchase program and a new dividend policy. How should investors interpret these moves?
The $2 billion share repurchase program and the $75 million quarterly dividend highlight TKO's commitment to returning capital to shareholders. These initiatives are likely to boost investor confidence and reflect the company's robust cash flow generation.
Risks and challenges. Despite the positive outlook, TKO faces some challenges. Can you discuss the risks that investors should be aware of?
Certainly, TKO's high debt level, standing at $2.736 billion, is a significant concern. Additionally, the company has a $375 million legal settlement related to UFC antitrust issues. These factors could impact financial flexibility.
And what about the increase in corporate expenses?
Corporate expenses rose by $40.3 million, primarily due to higher personnel costs and service fees. While these are manageable, they do add pressure on the company's margins.
Key takeaways. In summary, TKO has delivered a strong third quarter with impressive revenue growth and profitability. The company's strategic initiatives, including the share repurchase and dividend program, position it well for future growth. However, investors should keep an eye on the high debt levels and legal challenges.
Indeed, TKO's performance is commendable, and its strategic moves are promising. It's a company to watch closely as it navigates these challenges.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on TKO's performance in the comments below.